So we're going to come back here with a look at the economic calendar. And by now, a lot of you know we did not have a Monday session. And the reason for that, well, actually, part of that was my oversight because when I was away, I forgot that I'm literally coming back into the office on Memorial Day. Now, it's not just because it's a U.S. bank holiday. You guys know we've been together in the chat room on many a U.S. bank holiday. So that's not a reason for me to necessarily be out of the office. But take a look at who else is on holiday. France, Germany, the UK, which means that Paris, Frankfurt, London, and New York are all closed. That's pretty much about 60+% of daily turnover. So for all intents and purposes, there was no really a session today. There was no real liquid participated session today. Hence, it's just as well that we kick off our week on Tuesday after everybody comes back. So my apologies for any oversight there, but I think one glance at the economic calendar pretty much says why there's very little reason to be doing anything other than enjoying time with family and friends and a 3-day holiday, 3-day weekend really. So we start with the trade balance out of New Zealand. What I want to do is, as we go through the economic calendar, I want to talk about the ICSs. I don't believe the ICSs have changed much since before I went on the summer mini North American tour. And that'll be it for me this summer, I believe. I may go out to Austin one more time. I really need to do that more often and do more planning and scheming and, basically thinking about what else we can bring to the TFF site. We should be switching to Simpler Forex very soon. That was a big part of the conversation when we're going to go live with Simpler Forex, which actually doesn't mean anything different to anybody here. And actually, when we go to Simpler Forex, we're going to be adding some more perks to the Forex Pro Elite program. And we've already added more, just within the last quarter or two, we've already added more chat time, another 3 hours per week with the afternoon sessions on Monday, Wednesday, Friday. And we're going to continue to add small things like that to TFF/SF when we do become Simpler Forex. So the day starts with the New Zealand dollar trade balance. And remember, the New Zealand dollar for us is an individual currency story of weakness. And a lot of the reason for that is because we continue to see a lot of the weakness in the global dairy. And then a conversation that really starts to circle around whether or not we're going to see rate cuts from Wheeler and Company. So when you take a look at the price index, let's scroll down here. Where is that price index? Okay, and there we go. Look at this price index. We actually went down a little bit lower. This low here was 739. We're down at 714. So notice 693. That's that June 2006 result. We've got some support around 700. We've got some support into the 690s, but we break 690, it may not be much before we start talking about prices down in the low sixes and even breaking the sixes and breaking into, say, the 580s. So this could be there's more drop here if we break 700. I noticed we got awful close last time, 739, and then we rallied to just shy of 1,000 before we went back down and not only tested those near-term lows, those 2014 lows, but now we're even below the 2012 and closing in on possibly 2006 lows in the global dairy trade price index. This is a chart like anything else, and this chart certainly is going to reflect the weakness we're seeing in the New Zealand dollar, and that is further exacerbated by the fact that of the three COMDOLs, Aussie, Canadian dollar, Kiwi, the New Zealand dollar, the RBNZ, the Reserve Bank of New Zealand, was the one central bank of the COMDOLs, the commodity dollars or commodity currencies, that did not cut rates. And they do have some latitude to do it. And because that's been talked about more and more, you'll see the fact that the New Zealand dollar has been trading very heavy. That's also been a little bit more dramatic because of the recent turn higher in the US dollar off its own support area. So you'll see the New Zealand dollar, US dollar, this was one of those markets I mentioned to you that this was a great weekly options play. And yeah, I'm out of puts at this point, but the fact that we broke down this way, those New Zealand dollar futures puts were very productive for me. Now, since we do have the New Zealand dollar weakness, you'll notice on the watch list that we talked about before I left, and even that I discussed while I was on the road, Aussie New Zealand is a part of that New Zealand dollar weakness story. Even Euro New Zealand is a part of that story, that New Zealand dollar weakness story. Pound New Zealand, also a New Zealand dollar Canada. So when we go through the pairs, realize that the ICS, the individual currency story for the New Zealand dollar, is very much where can I sell New Zealand dollar against a stronger currency on the other side of the pair. So we kind of kick off the week with this tomato can currency with a hot zone at 6:45 tonight. Moving forward, U.S. dollar is in play. Now, I'm not as enthused about the U.S. dollar. Doesn't mean that I'm not willing to trade it, but I really would like to avoid it. I'm more comfortable selling euro than I am buying dollars. Now, that may sound strange because they're so inversely correlated, but frankly, I don't like the idea of selling U.S. dollars. I don't like the idea of really buying euro, but I'd rather buy euro. I don't want to sell U.S. So there's some weird juxtaposition when it comes to some of these currency stories that you'll see. And the only place that I'm even willing to play U.S. dollar is pretty much the one place where I would be selling it. And that's with the exception of my playing directly the DX futures. You can do the same thing through the UUP. So realize I'm not dodging the dollar altogether, but if I am getting in, it's with the DX futures on the weekly trend. You can do the same thing, or could have done the same thing on UUP. So you'll notice that for the most part, our watch list is pretty devoid of U.S. dollar plays. So that leaves a lot of these hot zones, whether it be core durable goods, consumer confidence. Those are going to be more interesting to me from the standpoint of what they do to the Dow, because I am willing and watching for opportunities to sell yen. So I'm looking to play the risk environment in that regard. But I really don't want a lot of exposure to the dollar. I don't trust the story. It was looking like a fresh downtrend, which I don't want to engage in, but now it looks like it's rallied back up into the range, and we're probably going to continue to see the back and forth in the dollar until the market feels a little bit more certain as to when the Fed is going to hike rates. I've been saying it for months now. End of this year, soonest, probably next year, more realistically. Going into Wednesday, G7 meetings. Sure, I mean, a lot of people do watch these. I really, frankly, have never been that much of a G7 or G20 meeting watcher. I really haven't. The sound bites will come out, the market will move, and I can then look at those market movements within the context of trends that I may already have been looking at. So I'll look for increased volatility, but not as much volatility as I will see in another one of our favorite individual currency stories, and that is the BOC. Now, the Canadian dollar may have had a somewhat rough week against the U.S. Now, you'll hear a lot of talk about, oh, the Canadian dollar bulls have disappeared, and where do they go? You got to think about which currency you're pitting the Canadian dollar against. The U.S. dollar had a big week. Just about everything lost ground against the U.S. dollar last week. So when people talk about the currency weakening, usually when you're reading mainstream media and they talk about the currency weakening, the Canadian dollar weakened against what? 9 times out of 10, they're going to be talking about weakening against the U.S. dollar. And I could make just as much a claim that this was really a U.S. dollar strength story, more so than a weakening Canadian dollar story. Because, if you want to make crude a part of this story, okay, I want to stick with the ICSs. I don't want to get into the actual trades here yet. But if you want to stick with the actual individual currency story and how crude plays a role, crude really hasn't done anything that should reflect that poorly on the Canada. It hasn't broken down in any major way. So to put crude slowness as part of Canadian dollar weakness, when in reality it probably was just U.S. dollar strength, is so misplaced. And this kind of goes back to what I talked about in the first video. The individual currency conversation as it applies to Forex is so seldom discussed. It really makes me, and this is not vanity or arrogance, it just really makes me wonder if people get it. Do they understand what they're looking at? The U.S. dollar, Canadian dollar is not a unit. It's 2 units. 2 different stories. two different economies, and we are putting them together. Okay? Even when you look at CD futures, you're still looking at the Canadian dollar being traded here in the U.S., which makes kind of an artificial Canadian dollar versus U.S. dollar story. And that's the way it's quoted if you were to look at the CD futures contract. So when I hear people talk about the Canadian dollar weakened, specifically against what? Currencies are always a comparative story. It's always a relative strength or weakness story. What will be more interesting is whether or not traders are really thinking that now that Stephen Poloz, the governor of the Bank of Canada, now that he's basically said he's done with the rate cuts, that we're going to see pretty much this 0.7 through the remainder of the year, once we go from no longer being dovish to now neutral, the question becomes, when are you going to get hawkish? And a lot of the Canadian dollar strength, if we're to see any going forward, is going to be based on how hawkish they think the BOC is. So he's been pretty optimistic, and I think traders are wondering maybe he overdid it. Maybe he's being a little too optimistic. So what we could see is, based on the data, maybe the rate statement takes on a little bit more a tempered, a little bit more even-keeled, a little less optimistic, and therefore also less hawkish tone. But remember, if you're playing Canadian dollar strength, which I think is fine, it's fine as long as you're pitting that Canadian dollar strength, which may be arguably on some shaky ground, right? Not terra firma here, pitted against stories that are weaker. Canadian dollar, Japanese yen, New Zealand dollar, Canadian dollar, right? And those are the only two Canadian dollar plays, which by the way are both buys, because I'm a little bit more optimistic about the Canada. Okay, those are both buys against weaker stories. What if you want to sell Canadian dollar? Where would you go? If you want to sell Canadian dollar, the place I would probably look to, the two places, we can do this during the market scan, is Aussie Canada, and even more so, possibly Pound Canada. So Wednesday is going to be pretty interesting as we get the BOC rate statement, which I think is going to be way more important. Then we get the overnight rate, which is widely anticipated to stay at 0.75%. We go into some Aussie data on Wednesday evening. Remember, the Aussie is a little bit one of our weaker but strength stories. If we were to rank our strength stories, it's been mostly Pound, then Canada, then Aussie. So private capital expenditure, if we see a solid number there, again, we're looking to buy Aussie, again, against weaker stories. I'm not pitting the Pound against the Aussie. I'm only going to be thinking about pitting the Aussie against the Canadian dollar if I think the Canadian dollar support would erode. But where am I looking for Aussie buys? Being a strength story, just the weakest of the three, Aussie yen, Aussie New Zealand, okay, and maybe Aussie Canada, but that would be a distant third. Going into Thursday, Pound is in play, our favorite strength story. You think second estimate GDP is going to be a big number for us? Absolutely. You want to see the data support even force the hand of Mark Carney and company, as they've done so many times over the past couple years. Good data forcing the hand of Carney and making traders care less and less about any kind of tempered statements he has about not being hawkish, and basically still standing on the footing, traders still standing on the footing of saying, you know what, you're going to have to hike rates. When is the question? Next year? If that's the case, we're going to start rallying the pound as long as the data supports it, knowing that you're just going to have to either talk hawkishly or eventually hike rates in light of that. So yeah, huge data point. Unemployment claims, always a big number, but again, we're not using the US dollar as a driver for anything. US dollar along with the euro are kind of sitting sandwiched between our strength and weakness stories. If we're going to play the euro, if we're going to play the US dollar, we better have a much clearer weakness or strength ICS on the other side. Okay? All right, so moving again to another hot zone for New Zealand. Again, being a weakness story, I would watch for any potential strength because that would create the corrections that might create the opportunities. And I believe even if there is strength in any of these hot zones, tonight's hot zone with the trade balance figures, or Thursday's hot zones with the business confidence, I do believe it will be sold into. Okay, and that brings us to Friday. GDP out of Canada, GDP out of the U.S. Again, I'm less interested in the U.S. number to affect the dollar and more interested in how this GDP affects the yen. I want these GDP numbers to be good because I would love the dollar strength story to come back online. That's going to take a little bit more time to trust again, but I have never let go of the dollar bullish story. I've just not traded it as actively because of the volatility and the weakness. But I still rather long term, hence my call options on the weekly. I like the longer term dollar strength. But GDP on Friday out of the U.S. is going to be more of a yen story for me. GDP out of Canada, we want to see good numbers there. I like to play, I would love to continue to play the Canada as a strong and stable story where I can buy Canadian dollar, sell yen, sell New Zealand dollar, maybe even sell Aussie against it. So that is the economic calendar and the ICSs that I'm watching. My favorite ICSs, strength stories, pound, Canadian dollar, Australian dollar. Neutral, the euro and the US dollar. That means the other side of the pair has to do the heavy lifting. Those pairs can just move sideways. The other side is going to move the currency pair. My favorite weakness stories, New Zealand dollar, Japanese yen. If the Dow continues to strengthen, we have a risk-on environment. That yen weakness will persist, and I would love to sell it. All right, next video, we're going to talk about those pairs that I've been alluding to in the last two videos, and we'll dive into those setups. So we'll do that next.